Hello everyone, this is Dr. A.G. Maitli, Assistant Professor, Department of Commerce with Finance. Now I am going to speak about fund flow statement. A fund flow statement is a statement prepared to analyze the reason for changes in the financial position of a company between two balance sheets. It incorporates the inflows and outflows of fund, that is sources of fund and application of fund for a particular period. So it is also righteous to say that a fund flow statement is prepared to explain the changes in the working capital position of the company. Now coming to the objectives of fund flow statement. Fund flow statement reveals clearly the changes in items of financial position between two different balance sheet dates, showing clearly the different sources and application of funds. That it summarizes the financing and investing activities of the enterprise. It also reveals how much of total funds is being collected by depositing of fixed assets, how much from issuing shares or debentures, how much from long-term or short-term loans, and how much from normal operation activities of the business. It also provides information about the specific utilization of such funds, that is, how much has been used for acquiring fixed asset, how much for redemption of preference shares, debentures or short-term loans, as well as payment of tax, dividend, etc. It helps the management in depleting all inflows and outflows of funds, which causes a change in working capital of the business organization. Now coming to the preparation of fund flow statement. The preparation of fund flow statement involves preparation of two statements, that is statement or schedule of changes in working capital, statement of sources and application of fund. So statement of schedule of changes in working capital. The statement or schedule or statement of changes in working capital is a statement that comprises the change in the amount of current assets and current liabilities on two balance sheet dates and highlights its impact on working capital. So the current assets includes cash in hand, cash at bank, bills receivable, sundry debtors, closing stock, short-term investment, prepaid expenses, other current assets. So current liabilities includes bills payable, sundry creditors, outstanding expenses, bill bank overdraft, short-term loan taken, proposed dividend, provision of tax, other current liabilities. Working capital is current assets minus current liabilities will give the working capital. So this statement is prepared to know whether there is net increase or net decrease in working capital. So increase in current assets increase the working capital, decrease in current assets decreases the working capital, increase in current liabilities decrease the working capital, decrease in current liabilities increase the working capital. Second statement prepared is fund flow statement. A fund flow statement comprises of, after preparing the schedule of changes in working capital, next step is to prepare fund flow statement to find out the different source and application of fund. While preparing this statement, changes of fixed assets and liabilities. The statement may be prepared in T form or vertical form. So it comprises of sources of fund. It talks about the extent of funds available from owners and outsiders. Application of fund. It talks about how the funds have been utilized. Funds deployed in fixed assets, funds deployed in current liabilities. So sources of funds include trading profit or funds from operation, issue of share capital, issue of debentures, raising of long-term loans, receipts from partly paid up shares called up, sales of fixed assets, investment, non-trading receipts. Application of funds include trading loss or funds lost in operation, redemption of preference shares, redemption of debentures, repayment of long-term loan, purchase of fixed assets, purchase of long-term investment, payment of dividend, payment of tax. So benefits of preparing a fund flow statement. It helps to explain the managers of funds as to why the company is sitting in liquidity strain despite making profits as reflected in profit and loss account. On the contrary, it helps the managers to understand as to how a company is financially strong deposit losses made by its operation front. A fund flow statement helps us to analyze whether any short-term funds are being used for long-term purposes. the gray area which can be only be highlighted by preparation of fund flow statement.